In today's quick video, we're going to discuss some of the jumbo loan approval steps for Jacksonville home buyers. Any buyers that have questions can reach us 7 days a week at 800-962-0677. Of course, visit us at jumbomortgagesource.com. Before we start, we want to first establish what exactly is a jumbo mortgage. Again, a jumbo mortgage is going to be any loan amount that exceeds the conforming loan limit. And in Florida, the conforming loan limit is currently set for 2023 at $726,200. That is a standard conventional conforming loan. So any loan amount that exceeds that would be classified as a jumbo mortgage. That is for a one-unit property. You can see in the chart below that depending on the number of units, the loan limit for conforming or conventional loans does increase. And again, this is for Duval, Clay, St. John, all counties in Florida except for Monroe County down in South Florida in the Keys. And the loan limit there is slightly higher. It's $874,000. Okay, the second thing is we wanted to go over some of the loan approval steps. First and foremost, home buyers want to determine what their approximate loan amount will be in down payment. A lot of times, the low down payment programs that are out there, there are options that are available up to 95% financing for the jumbo loans. And each program does have a certain loan amount limit, which we'll review here in the next slide. So get an idea of what your approximate loan amount is and then how much you can put down. And then understand all the qualifying requirements like the down payment, credit, and payment reserves. A lot of programs may require 3, 4, maybe up to 6 or 9 months of payment reserves depending on how high the loan amount is. And then once you determine those things, it's a good idea to speak with a specialist and really review all your options in detail. Let's look at the most popular, of course, the 5% down payment. These loan limits are currently between 1.5 and 2 million. And again, these can and do change, especially with the market changing. As the market changes in housing in general, lenders and banks often react and they will adjust their program guidelines. So it's always a good idea to refer back to the website for the latest information. Credit scores for the maximum 95% generally start at a 680 credit score. Loans that get really over $1 million may require a slightly higher credit score. Documentation, much the same as any conventional or conforming loan. These programs are complete income and asset documentation. 2 years of W-2s would be required for those home buyers that are regularly employed, and then of course tax returns for the previous 2 years, for buyers that are self-employed. Property types would include all primary and vacation homes. Second homes, vacation homes will likely require a greater down payment of 10% down. Single family homes, townhomes, condominiums, most condominiums, they're all eligible for the program. And investment properties are also permitted, but those generally require at least 20% down. Construction to permanent financing, this is true construction to permanent financing. That is okay with 10% down payment. And regular new construction homes that may be in a new community, like a regular new spec home, oftentimes those are just being sold directly from the builder to the buyer. So those will be really viewed as any other standard transaction, and there will be options available up to 95% for those. Transaction types include purchases and rate and term refinances. The terms that are available are really all the common adjustable rate loans, 3, 5, 7-year, 10-year ARMs, fixed rate, 30, 15-year fixed rate loans, all fully amortized. There is no interest-only option available as of now for the 95% financing. Combo loan options are available, or piggyback combo loans are available. Uh, great way to avoid paying mortgage insurance, or PMI, for those home buyers that are putting less than 20% down. That is, again, a great way to eliminate that expense. And also, it's a great way, oftentimes buyers can keep their first mortgage, their primary mortgage, below the conforming loan limit cap, and by doing that they take advantage of slightly lower interest rates, which is always a good thing. So doing a first mortgage there and then piggybacking a smaller second mortgage is a good way to take advantage of some of those things. 10% down payment options, generally loan limits of 2 to 2.5 million. Credit scores can be a little bit lower for the greater down payment. Again, the more money you put down, the lower the credit score. It's all about risk, just like any other loan. Higher credit scores, though, are often required once these loan amounts, get higher, over $2 million. Documentation, property types, and that's all the same as before. The transaction types, all the same: purchase and rate and term refinance, along with there are some cash out refinance options too for home buyers that do have significant equity and may want to do a cash out refinance for home renovations or debt consolidation, or whatever those options are available as of now till 90%. Again, some of these things they can change as the market adjusts. Again, all the same as far as available terms, and combo loan options, again, are available. 80-10-10 combo loan options are available to eliminate the need for PMI, and also, again, take advantage of lower rates. Documentation and reserve requirements. Again, these are all fully documented loans. 2 years tax returns, W-2 statements for those buyers that are regularly employed. 3 months generally of documentable assets for the down payment and closing costs, and generally most recent quarterly statement for retirement accounts as needed. Again, if documents aren't needed to show, if you have enough money in one account that shows your down payment, your closing cost, and then it also is sufficient to show the reserves that may be required, that's all that's going to be needed. They don't want to get more documentation than what is needed to meet the underwriting requirements. And one other thing to note is, when it comes to mortgage payment reserves, that does not need to be in a liquid account like a regular savings account or a money market account. The reserve requirements can be met through non-liquid accounts like a 401k or an IRA. So that's just one thing to note, is that those accounts will meet the needs of any reserves. Some other jumbo loan options for self-employed buyers: there's bank statement programs that are available up to 90% loan to value. Again, this is helpful a lot of times for business owners that can qualify their income based on 12 months bank statement deposits. So that is helpful. And again, that requires a minimum of 10% down. Vacation homes, second homes, are available with 10% down. And then again, true construction to permanent financing with 10% down. Again, home buyers that have questions are encouraged to reach out to us 7 days a week by calling 800-962-0677, or visit us there at the website at jumbomortgagesource.com. Please be sure to like and subscribe if you find this video helpful. Thank you.